My previous Ethereum analysis happened somewhere back here, which was last week. And in that analysis, I mentioned, hey, this is a macro origin line right here. And this is an established, I believe, a weekly or even a monthly horizontal, which is a big deal, which from that point was only about a 3%, 4% range here. And when you have two extremely important lines acting as either support or resistance on any asset, oil, black market testicles, doesn't matter, but particularly crypto, like any crypto, if you have two very important lines, so not counting the 1 hour 10 EMA, that's not a super important line, right? Very important lines together acting as resistance or support, and price goes to interact with one of them. Price will typically go hit the one that's farther away from whatever the middle zone or, farther away from price. It happens almost every single time. So I made that black triangle here saying it looks like price will hit 1720. But even if it doesn't, it's not going to hit this line and get a perfect rejection as it often does on origin lines. It's going to do a failure pattern above it. And my guess for how big the failure pattern would be was 1720, which is right here. Okay, so these, I still think, honestly, it might not hit it until FOMC. It might just hit that on a wick. But I'm telling you, 1720 is a key freaking level for Ethereum right now. So let's dive in and look at some smaller time frames. So what I'm trying to do now is I'm trying to identify what other groups of different types of trading styles are going to be looking at to make trading decisions on Ethereum outside of what I already have established. So I'm trying to see, okay, do I not have something on my fairly simplistic chart here that will come into play? And one thing I'm looking at is this trend line from, I guess, the yearly lows. Yeah, the yearly lows down here. Down to 800 something, which this hit the origin line perfectly. See that? Like within 1%. It was only, let's see here, 899 or 889, 889. Yeah, it was $9 off. And I anticipated that type of perfect support / resistance up high was not going to happen. Rather, you'd get a failure pattern. This might be a line that folks are staring at. So I think Ethereum is going to maintain the likelihood of hitting 1720 as long as price does not take out this micro time frame low right there. So honestly, Ethereum could pull back pretty hard and still be freaking bullish on the time frames like 1 hour and 4 hour and above. So as long as Ethereum stays above, I would call it right here, 1488. Its upward momentum and structure is still bullish, and which maintains the probability, I think, that 1720 will be hit. So that would be kind of my so this is the juncture, and you can see that this horizontal here aligns with where price would be. Oops, sorry. Having a brain fart. So this general area here will hit this trend line. Boom. So even if it hit that bottom trend line, it would still be okay. But this is the pivot point because people trading horizontals on small time frames plus this midterm time frame trend line, if it goes below there, then that's the pivot point where this flips to be less than 50% likely. That exact point. So, yeah, 1488 is a key line. That is a pivot in a probability pivot. Say that 10 times fast. And other people, the way they say that is invalidation. I don't like that word because it doesn't actually invalidate stuff. Like, it's often used for fake outs and like all that stuff. So I try to view it as a spectrum of probabilities and where something, crosses the 50 threshold. I don't think invalidation really I don't like that word. But this is my probability pivot point, and it's a line in the sand. So we have an exact point for probabilities flipping, and we have exact targets for where the move likely might want to go. And so if it comes below here, right, even wicks down, myself's big. If it wicks down and looks like it's going to be aggressive coming up, just realize that that point was crossed. This is still improbable, even if it goes below and spikes up aggressively, because it means you're going to be on lower high watch. So if it goes below here and then does something very aggressive, I would still call that being improbable until a specific wick high we're taking out. So if 1720 flips to be improbable because 1488 is taken out, it wouldn't become probable again until this wick up here is taken out. So the probabilities, so again, on a spectrum, right? It's fluid. It could reflip to be probable, but it would take a lot of work. It would have to get back above this wick high to become probable again, because if it goes below and spikes back up, it's more probable to form a lower high. And when that probability becomes not a probability anymore, of lower high is right there. So I think that type of price action in your probability pivots, that covers a lot of range, actually. Yeah, that's 15% of range for Ethereum, and that really should get you through an entire week. And if things do break down below 1488, the next obvious target is this zone. I think this is actually from 2017. So all of this is a big line. I think this one's from 2017. This one's from earlier in 2020, I believe. But and so the breakdown, if it goes below there and hits I don't know if it would go. I don't think it would go straight down. But if you become on lower high watch, it hits a lower high and then starts going down. I believe the horizontal 1390 or so is going to be your obvious target. Even though it didn't interact with it very well here, but it did back here. So it would go straight here. So that would be your target to the downside. So now we have established the probabilities are still to the upside. Where exactly to the upside? When do your probabilities flip to the downside? What to do and how to react to price bouncing hard after a downside move, be on lower high watch. And then if it does a lower high, continues breaking down, you got your target to the downside. That would easily get you through 7 to 10 days of price movement on Ethereum. And it feels like I'm missing something though. Probably am I missing the weekly 10 or weekly 21's in play? 55's up there. Yeah, I did miss something. So something that will actually add to the probabilities being flipped and pivoted is you have a third type of trading group, which will be looking at 1488, because by the time, if price gets around there, the weekly 10 will be at this line. So you have EMA traders, right? You'll have trendline folks, all seeing the same thing with the idea that it'll become support. But if it loses support, two different groups of traders will then stop being bullish because it broke it, right? So yeah, honestly, that 1488 level is probably pretty key. So that's your equivalent to the line in the sand that I have on Bitcoin. So if you haven't watched my Bitcoin portions, then you'll want to go to my channel, watch my most recent 2 Bitcoin videos if you're jumping onto this recording for Ethereum. But this is a very Ethereum and Bitcoin have exceptionally clear lines in the sand. And FOMC Wednesday, November 2nd, that can break rules. So the same idea applies to Ethereum. If this is broken to the downside, specifically on Wednesday, that does not take the probabilities away from this being hit, because every single FOMC, since like the last 2 years that I've back tested, you simply get bidirectional volatility that doesn't necessarily have a rhyme or reason. It just does, and therefore you wouldn't want to apply that probability pivot if it happens on Wednesday, November 2nd. But if it happens on Thursday, perhaps for the second time, let's say on FOMC it comes below here, then gets back in, okay, so that we didn't trigger this being improbable anymore, lower high watch. But if it happens on Thursday, and then you would be on lower high watch. Make sense? And that's how I think everything I mentioned here should keep you safe if you're an Ethereum focused trader.